Another smaller sector that's catching or grabbing eyeballs this afternoon is tyre stocks. So across the board, tyre counters are doing well. JK Tyres is up 8.5% at the day's high point on very strong volumes, and the rest of the pack also, actually the likes of Seat also doing quite well in trade. Puneet is standing by to tell us what is leading to this rally in tyre stocks. Puneet, is this just sector rotation, or is there a trigger that's driving these counters higher today?
Well, it definitely looks like a fundamental trigger backed by these companies' financial as well as the demand picture that they presented post the quarter four earnings. So what we've done is we've just collated 5 key factors that we feel might be driving this positive run in the tyre stocks. Let's start with the margin picture first. Margins are at a record high over the ever since the pre-pandemic levels. Over the last 5 years, we've seen margins expand to the 13 to 17% range across players. Especially someone like an Apollo Tyres has recorded 17% margins in FY24. Which were unheard of before. When you look at MK's note also, which came in today, they have said that the margins of the 16-inch and above tires are much higher by roughly 10 to 15% compared to the 12-inch tires, and most of the tire players are exporting these in the global market, and we've seen that the demand has been created for these in India as well. That is also leading the average selling price to go up and benefiting the tire stocks as well. For JK Tyres specifically, they are targeting 45% of the total sales coming from these 16-inch tires versus just 25% correctly over the next 3 to 4 years, and the same kind of demand is seen in other tire makers as well. The second one is the net debt, which has come down, and this has been one of the key positives of the industry, helping them save interest and lower the debt cost as well. So most players have paid down debt, including the likes of Apollo Tyres. Now, when we look at the FY19 level, the graphic which is on your screen, likes of JK Tyre, Apollo, all had net debt to EBITDA levels of above 2, and in some cases 4 times as well. That debt has come down in 2024, and that has really been one of the key earnings which has been driven. And for FY25 as well, they have guided for this to even get lower. For JK Tyre specifically, it's expected to go to 1.5 times, while for Apollo, it's expected to go to 0.4 times. The third one of the key 3 important factors is the EPR provision. Now, this was an impact which the government notification had come in, and they have said that the provisions will be minimal. They have said roughly around 100 crores is what the impact is, but the street has taken this positively, that this has a cap of roughly 100 to 110 crores, which is a key positive, and they have looked past this particular cost which came in as a surprise in the last quarter of financial year 24. The fourth thing is improving demand, premiumization, as we spoke about, and that can offset any kind of raw material price impact. This is what MK has said in his note today as well, which is a key positive for JK Tyres, Apollo and the likes. And finally, they have said that the Indian tire companies are competing against multinational corporations as well as the market leader, which is MRF. So going forward, we will see positive demand for Apollo, for Balakrishna Tyres, Seat, JK Tyres as well, and they are challenging that. Finally, to end it with brokerage calls, we have seen that the highest brokerage calls are coming on Seat, and that's why the stock is reacting up 9%, roughly 63% buy calls for it. The second one, which people are more positive on, is on JK Tyres with 60% buy calls, and the third one is someone like an Apollo, which is around the same range. And for MRF specifically, there are 80% of analysts who have a sell call in it. So eventually we are seeing the other tire makers gaining share. MRF will have to do well this year, but overall the other 4 players which are listed have been doing really well, and that's what the brokerages are most positive on. Back to you.
Okay.